During the month of July, private firms added to their payroll numbers at a slower and marginal pace. On the price front, firms faced the fastest rise in overall input costs since March, while firms passed on higher cost burdens to clients at a slower pace. The Purchasing Managers Index by Stanbic Bank Kenya posted a reading of 53.6 in July, lower than 55.0 recorded in June. Stanbic Bank says the latest reading signaled the slowest improvement in the health of the sector since January, but was consistent with a market expansion that was stronger than the long-run trend at 52.9. Purchasing Managers Index reading above 50.0 signaled an improvement in business conditions on the previous month, while readings below 50 showed deterioration. Commenting on July's survey findings, Gibran Qureshi, regional economist at Stanbic Bank, said the health of the private sector remains sound and the decline in the PMI in July is still above the historical average since data collection began. Anecdotal evidence in July seems to be pointing to rising input costs for firms. The rate of growth eased to the slowest in January but remained sharp. Stanbic Bank says strong market demand was cited as the key factor behind the latest rise in new orders, which rose at the fastest pace since March this year. The lender says private firms raised staffing levels in July, reflecting sustained periods of expansion in output and new orders. In response to strong demand conditions, Kenyan firms also raised their purchasing activity for the 8th consecutive month in July. Despite easing to the slowest since January, the rate of growth was sharp and outstripped the historical average. In tandem with the expansion in input buying, firms raised their pre-production inventories at a sharp pace, albeit the weakest since January. As has been the case since February 2015, Kenyan firms faced higher overall input costs in July.